This is the millionaire journey. Consistent investing and smart trading strategies is what we're going to discuss in this video. So this is my journey towards financial freedom. My goal is to become a millionaire by consistently investing in index funds and generating additional income through selling cash secured puts and covered calls. I believe in the power of a stock market and the potential it holds for long-term wealth generation. The best part of this is the money that I will be generating will be generational wealth, and I will be transferring all of that to the next generation of mine. Through disciplined investing and risk management strategies, I'm confident that I can achieve my financial goals and secure my future. Index funds are a popular tool for consistent long-term investing. Two of the most popular funds that are out there is SPY and QQQM, which track S&P 500, the top 500 companies in the United States, and NASDAQ 100 respectively. By investing in these funds consistently over time, you can benefit from overall growth of the stock market and achieve solid returns on your investment. It's important to note that index funds are not without risk, but they offer a diverse approach to investing that can help mitigate some of the risk associated with individual stock picking. Most of the investors that you know about out there suggest every single person to invest in S&P 500 index funds like SPY or NASDAQ 100 like QQQM. So that's something about investing consistently in the index funds. What about generating additional income with cash secured puts? As in the introduction, I mentioned that I'll be generating some cash or additional income through selling cash secured puts. What does that mean? Let's discuss. So cash secured puts are a type of options trading strategy where an investor sells a put option on a stock they would like to own at a lower price. If the stock price drops below the strike price of the put option, the investor is obligated to buy the stock at that strike price. In exchange for selling the put option, the investor receives a premium upfront. So how can cash secured puts generate additional income, you may ask? By selling cash secured puts, investors can generate additional income by collecting the premium upfront. If the stock market remains above the strike price of the put option, the investor keeps the premium and can repeat the process. If the stock price drops below the strike price, then the investor is obligated to buy the stock at lower price or sell covered calls in my case on the stocks to generate further income. So then what are covered calls, you may ask? Covered calls are a popular strategy used by investors to generate additional income from their stock holdings. This strategy involves selling call options on stocks that you already own, with the goal of earning income from the premium received. If the stock price remains below the strike price of the call option, the investor keeps the premium and the stock. If the stock price rises above the strike price, then the investor is obligated to sell the stock price at the strike price. Covered calls can be a great way to earn extra income in a flat or slightly rising market. They can also help reduce the cost basis of stock position. However, it is important to understand that the risk involved with this strategy. If the stock price drops significantly, the investor may be left with a loss on the stock position, even after accounting for the premium received from selling call options. So then we are talking about risk. How about talking about risk management, strategies to protect your investments? So the three strategies that I'm trying to follow are diversification, stop loss orders, and hedging. So what is diversification? Investing in a variety of assets can help reduce risk in your portfolio. Consider diversifying across different sectors, industries, and asset classes to minimize exposure to any one area. Then the second thing I talked about is the stop loss orders. A stop loss order is a type of order that automatically sells a security when it reaches a certain price. This can help losses in case the market turns against you. And the last thing is hedging. Hedging involves taking a position in one asset to offset potential losses in another. For example, buying a put options on an index fund can help protect against the market downturn. So what is the road ahead? I think consistent investment in index funds and generating additional income through cash secured puts and covered calls is the key to achieve financial freedom and become multimillionaire. I'll show you my net worth weekly, and I will also show you how I'm making progress against the index funds. So moving on to the last part of this video, I wanted to show you guys my returns compared to the S&P 500 returns this year. So I have been able to generate over $10,000 year to date with close to 14.14% increase, whereas the S&P 500 has returned close to 12.75%. This difference of close to 2% is what I was talking about when selling cash secured puts and covered calls. Remember, my biggest holding in this portfolio is SCHD. If I were to have other index funds like SPY or QQQM, my returns would have been far greater than just 14.14%. But that said, I'm making consistent dividend income, $100 every single month, just because I hold more than 480 shares of SCHD. So that will do it. Thank you guys for watching this video. I hope you guys like the idea of sharing my portfolio every single week and showing you guys my net worth overall. If you guys like this video, make sure to hit the thumbs up button and subscribe to my channel. And I'll see you guys in my next video. Take care.